So, BigBear AI got pretty much beat up after they dropped their Q2 earnings. We're talking about a stock that got obliterated and then came back from the dead, down over 30% at one point before clawing back some of those losses. But here's the thing that's got me scratching my head. This company just raised $300 million in cash through their ATM program. They're sitting on their strongest balance sheet ever with $391 million in the bank, and their position right at the intersection of two of the hottest trends in tech right now, AI and border security. Look, I get it. The headline numbers were ugly. Revenue dropped from $39.8 million to $32.5 million year over year. They took a massive $70.6 million goodwill impairment charge, and the net loss ballooned to $228 million. Those are the kind of numbers that make algorithms dump first and ask questions later, but if you actually dig into what's happening here, and I spent way too much time going through their 10Q last night, there's a completely different story unfolding. This isn't a company that's dying, it's a company that's transforming, and sometimes transformation is messy as hell. What really caught my eye was this massive pivot they're executing. They're basically saying goodbye to some of their traditional army contracts, which that hurts revenue in the short term, and repositioning themselves for what's coming next. And what's coming next is absolutely insane. We're talking about $70 billion in supplemental funding for U.S. Customs and Border Protection over the next 4 years through this one big, beautiful bill act. That's not a typo. $70 billion. BigBear is already the leader in biometric entry-exit systems with $673 million specifically allocated for that area where they dominate. They've got their enhanced passenger processing deployed. They've partnered with Analogic for threat detection, and now with the new administration's massive focus on border security, the timing here is everything, but it gets even crazier. They just inked a partnership with IHC in the UAE for AI development, tapping into a potential $1.4 trillion joint AI investment between the US and UAE. Trillion with a T. When I see a small cap AI company with deep government relationships getting in on the ground floor of a $1 trillion initiative while everyone's panicking about quarterly earnings, my ears perk up. This UAE deal could be absolutely transformative, especially as the Middle East becomes this unexpected hub for AI development that nobody saw coming a few years ago. They're also working with Narval in Panama, expanding their global footprint in ways that traditional defense contractors just can't. The financials tell such a different story than the stock reaction would suggest. They've got $391 million in cash, only $143 million in debt, putting them at a net cash position of nearly $250 million for the first time in company history. Think about that for a second. The market is valuing this company at roughly $2 billion for the actual business after backing out the net cash. For a company positioned at the intersection of AI and border security, two areas where spending is about to explode, that valuation seems completely disconnected from reality. Now let's talk about what actually went wrong, because I'm not going to pretend everything is perfect. The Army repositioning hurt them badly as they lost volume on several programs while the Army shifts toward more advanced AI solutions. Timing sucked because it hit right when they were integrating Pangiam, which they acquired earlier this year for $211 million, mostly in stock. So you've got integration costs, restructuring charges of $3.6 million in revenue, headwinds all hitting at once. It's like everything that could go wrong did go wrong in the same quarter. And this is crucial, these are timing issues, not structural problems. The Pangiam acquisition actually makes them even stronger in vision AI, facial recognition, and biometric anomaly detection. Exactly the tech that's going to be in massive demand. Pangiam brought in $10.8 million in revenue this quarter, but that's just the start. The real value is in the technology stack and the customer relationships they bring. Here's what nobody's talking about, and it's driving me crazy. They're going on offense for M&A. When CEO Kevin McAleenan says they're going on offense with the strongest balance sheet in company history, That's not what dying companies do. That's what companies do when they see massive opportunity ahead and want to accelerate. Companies in trouble don't go acquisition hunting. They hunker down and cut costs. BigBear is doing the opposite. The backlog situation is interesting too. It dropped from $418 million to $380 million, but look closer at the composition. Their priced unexercised options are still at $279 million. These are contracts where the government has the option to extend but hasn't pulled the trigger yet because of budget uncertainty and continuing resolutions. When funding clarity comes, and it will with these new bills, those options likely get exercised. That's hidden upside nobody's factoring in. And that massive net loss of $228 million that everyone's freaking out about, strip out the $70 million goodwill impairment, non-cash, the $136 million fair value adjustment on derivatives, also non-cash, and the operational picture looks completely different. They're actually approaching operational break-even once you adjust for all the one-time noise. The company burned only $10.5 million in operating cash flow for the half year, which is nothing when you've got $391 million in the bank. What really gets me thinking is the comparison to where AI and defense tech companies were a few years back. Remember when Palantir was this weird money-losing government contractor that nobody understood? They were doing AI before AI was cool, working on classified stuff, burning cash like crazy. Everyone hated it, analysts couldn't model it, and the stock went nowhere for years. Now look where it is. I'm not saying BigBear is the next Palantir, that's lazy analysis, but the parallels are fascinating. Deep government relationships, pivoting to commercial applications, going through that period where the market just doesn't get it. BigBear's Conductor OS platform for autonomous systems at Talisman Sabre. Their work on drone swarming for the Army. Their shipyard AI for predictive maintenance that's already being used in actual shipyards. This isn't some legacy defense contractor trying to sprinkle AI buzzwords on old technology. This is real cutting-edge stuff. And with the DoD's massive push toward autonomous systems and AI-driven warfare, they're positioned perfectly. The company has been clear that the Army's shift to advanced AI solutions actually benefits them long-term, even if it hurts in the near term as contracts get restructured. Look, I've seen this movie before with growth companies having messy quarters while transforming their business. The market hates uncertainty, absolutely despises it, but that's exactly when the biggest opportunities emerge. CrowdStrike, after their first public stumble, MongoDB during their cloud transition, even Amazon back when AWS was just starting and dragging down retail margins, painful short-term, spectacular long-term if the thesis plays out. The difference here is BigBear has a massive cash cushion to execute their transformation. They're not burning money at an unsustainable rate anymore, and they're positioned in markets that are about to see explosive growth regardless of who's in office or what the economy does. Border security and AI aren't nice-to-haves anymore. They're national priorities with basically unlimited budgets. The U.S. investments in AI physical infrastructure alone are up 44% year over year. So yeah, I'm buying. Started a position after the sell-off, and I'll probably add more if we get another leg down. This isn't financial advice. I've been wrong plenty of times, but when I see cutting-edge AI technology, deep government relationships, massive secular tailwinds, and a fortress balance sheet all trading like the company's going bankrupt because of one bad quarter, well, sometimes the market gives you gifts wrapped in ugly paper. You just have to be willing to unwrap them when everyone else is running for the exits. The panic selling creates the opportunity.